Welcome to the explanation of the TREC third-party financing addendum. I'm Ann LaCusta and I'm your broker. This version of the third-party financing addendum becomes mandatory for use when there's financing. This version becomes mandatory for use on March 1st, 2019. That means that the old version of this addendum will not be acceptable after March 1st, 2019. For your contracts, it's a great idea to begin now using this new version of the third-party financing addendum. Stick with me. I'm going to tell you how every paragraph works and point out the changes. There are some very important changes, so please hang in there and stay with me while I explain the form. All right, first is the blank with the street address and city, which is obviously of the property and must match the contract. Let's start with paragraph 1, which makes it very clear. Buyer shall apply promptly for all financing. Buyer shall make every reasonable effort to obtain approval. And buyer must furnish all information and documents required by the buyer's lender. So what that means is that this is a contractual document, and the buyer will be in default of the contract. If they take their sweet time and feel like they have every right to take their sweet time in applying for financing, I'm sorry, I just couldn't drop that off. I didn't have time to upload it today. No. They are contractually obligated to make efforts to obtain financing and to obtain approval for financing. So they must be able to show that they cooperated promptly, or they will be found to be in default of the contract. This is not them just taking their sweet time and deciding however they want to handle it. They should not have gone under contract to purchase a home with financing unless they intended to promptly and responsibly apply. All right, then here are the types of financing that are a part of this addendum. Conventional financing, Texas Veterans Loan, FHA insured financing, VA financing, USDA financing, reverse mortgage. Seller's financing is on a different addendum. All right, so usually you are going to be seeing conventional, FHA, VA. You may see some USDA, but remember that is by address, that is by area. So if the area is approved for USDA financing, then this is an option. If it's not, then this is not an option. You may see some of this though. All right, let's start with paragraph A, the first mortgage loan in the principal amount of blank. So this is how much are they going to be borrowing, and it goes in this blank. All right, due in full in how many years? So this is usually 15 or 30, however long their mortgage is going to be for. I want you to look at this with interest not to exceed blank percent. I want you to understand how important this is. If I'm the listing agent, right, and I'm protecting my seller, I want the number in this blank to be high. I want the number in this blank to say 7%, 6%, 5%, whatever I can get the buyer's agent to agree to, right? That means that if the interest rate went up to 6 or 7%, and that's what this form said, that would not allow the buyer necessarily to get out of the contract. This would not be a buyer out because it says with interest not to exceed 6%. So even if the interest rate goes up, potentially this is not an out for the buyer. If I'm the buyer's agent, I'm going to put whatever interest rate I think they want to get. And I'm going to keep it as close as possible because this then makes it easier to exit the contract for the buyer. So just pay attention to these details. They do matter when it comes to any kind of serious disagreement between buyer and seller. That's when every blank becomes important. So this is how these blanks work. All right? And then this is for the first however many years of the loan. Not so many people today are getting an adjustable rate, but it's possible. So the interest rate might be for the first year, it might be for all 30 years. You'll fill that in correctly. And then origination charges and how much are they expecting to pay. It's a great idea to get help from your lender to fill this in correctly and to make sure that you can live up to the terms. Remember, a contractual document. Certainly for FHA insured financing, this needs to match the contract where seller paid closing costs. This all needs to work together. And a good lender will be happy to help you. VA financing, again, a good lender is going to be your friend in filling this out correctly. The most important thing for you to know about VA financing, the minute you hear your buyer would like to use VA financing, I want you to be aware that they need to have their certificate of eligibility available, and that certificate needs to be available for this loan. They cannot have more than one loan on their certificate. So just make sure that you understand there is a certificate of eligibility that they must have in hand, because it can take weeks. And right now we're in a government shutdown off and on time, and certainly it can take weeks. So just be aware that it's good if they already have that. All right, let's move down now and discuss approval of financing. 2A is buyer approval, right? It's very important that you understand this is approving the credit worthiness of the buyer. So do they have too much debt? Then they will not be approved as a buyer. Do they have too little income? Then they will not be approved as a buyer. This is the buyer receiving approval for this contract and this financing. And right here you put, if buyer cannot obtain buyer approval, buyer may give written notice to seller within blank days. 21 days is kind of common, I guess. If I'm the listing agent, I would like for this number to be as low as possible, right? I want the buyer to go ahead and get approved. 5 days is not reasonable. A buyer can't get approved in 5 days. But you might put 15 days. If you're the seller and you have a multiple offer property, you might spur them on to get approved more quickly. If I'm the buyer's agent, I want to put as many days in this blank as that listing agent's going to let me get away with, right? This is a great out for a buyer, and allows them the opportunity to exit the contract if they cannot get approved. So make sure you're paying attention to these days. It is super important, either for the buyer's agent or the listing agent, to pay attention to this deadline. Buyer must give written notice to seller within those days. And this contract will then terminate and the earnest money will be refunded to buyer. If buyer does not terminate the contract under this provision, then the contract is no longer subject to the buyer obtaining buyer approval. What does that mean? Well, that means if they have the ability to purchase the home without financing, they better start liquidating their IRA and selling their assets, because it's no longer subject to them receiving that financing. They are expected to show up at closing whether they have financing or not. It gets to be very serious very fast. So please pay attention to this paragraph. All right? And then look right here. This little box is confusing to people. So if your buyer has the money to buy the home in cash, you might check this box that says this contract is not subject to buyer obtaining buyer approval. So in a multiple offer situation, the buyer might be trying to get financing. They want to get financing, but they don't have to get financing. And they would go ahead and pay cash for it if for some reason their financing didn't come through or it got sticky. This box can be a real asset to your buyer and make your offer super attractive to that seller. So just be aware of what this box means. Right, the big changes to this come right here in 2B, property approval. So this is the approval of the house. The lender says, yes, the house appears to be worth enough and appears to be in good enough condition that we are willing to make the mortgage on this property. Or the lender says, nope, we're not going to make the loan on this property. We don't like the house. We like the buyer just fine. The buyer has great credit. Everything's good with the buyer, but the house doesn't look to us like we should make this loan. This is about property approval. There's some big changes in this paragraph, so please pay attention. If the buyer's lender determines that the property does not satisfy the lender's underwriting requirements for the loan, including but not limited to appraisal, insurability, and lender required repairs, buyer, not later than 3 days before the closing date, may terminate this contract by giving seller notice of termination and a copy of a written statement from the lender setting forth the reason for the lender's determination. All right, remember we're talking about property approval. In the past, on the third-party financing addendum, this could go right up to closing. 30 seconds before closing, if the lender decided that the home did not meet their needs, if there was a roof problem that wasn't fixed and the insurance company wouldn't make an insurance wouldn't provide homeowners insurance. The whole deal fell apart right before closing. And the buyer got their earnest money back. 30 seconds before closing, buyer was still entitled to their earnest money. This is the big change. To be perfectly frank with you, there will still be lenders that decline a property closer to closing than 3 days. Lenders are not a party to our contracts and do not have to live by our rules. But if it's closer than 3 days before closing, your buyer will not be entitled to their earnest money back. That's the big change. So what it says is that if it's more than 3 days before closing, right here, more than 3 days before closing, they send a termination and they send a written statement from the lender, then if the buyer terminates under this paragraph, under these provisions, the earnest money will be refunded to buyer. So that doesn't mean that it still won't happen, right? We can't buy a house if the lender won't make the loan. That's just the facts. It could still happen right up until closing. But now it says if it's not more than 3 days before closing, the earnest money will not be refunded to buyer. If it's too close to closing, buyer will not get the earnest money back. This is a very big change in the contract, so please be aware. Then as we go down, you'll see FHA VA required provision. This is the appraised value that is required by FHA for FHA to make the loan. Again, this goes back to getting a good lender to help you, and this will match the contract, the information in the contract. And then at the bottom, both buyer and seller must execute. This is the new third-party finance addendum required March 1st, 2019.